Welcome to simplefinancesupport.com. Today in this session I would like to go over key dates in accounting document. There are different dates like system date, document date, posting date, translation date, baseline date and due date. So these dates play a crucial role in the overall accounting document processing. So if you see at the right side, you can see here an accounting document having a document number of 20009, document date and posting date. Like this, you have different dates in the overall accounting document. So let's look at the system date. System date is the date derived based on the server. Typically, this is used for time stamping. It cannot be manipulated by the user at the time of entering the document. So it is also used for audit purposes, system audit, tax audit, to determine when a particular document is entered. Any other date in the system can be manipulated, but system date cannot be manipulated. So the document date is a document date, typically an invoice date for vendor and customer invoices, and this date also is like a posting date for accounting journals. The date on which the document is issued is what you can call as a document date. Typically the posting date and document date will be same for typical accounting journals, and due date may be calculated for vendor and customer invoices based on this particular document date. The posting date is the date in which, when you enter, the fiscal year period is determined based on the posting date. So normally the posting period is the period in which you're operating in, and the date you pick up in that particular period is always determines that period itself. So typically your financial closing is monitored by this date, and the previous periods dates are closed so that you cannot pick a previous period posting date. And also future periods, you cannot post future periods if the periods are closed. So the posting date typically is lying within the opening period, typically the current period itself. Whereas the document date can be any date. It can be future date or past date, whereas posting date cannot be like that. So if you go back to system date is always the current date. Document date can be any date. Posting date has to be the date of that particular period itself. Then translation date comes into the picture when you are processing invoices or documents in foreign currency. If you are processing a document other than the local currency, then the exchange rate translation comes into the picture. At that time, system will use exchange rates of the date on which the translation date is mentioned. Typically, if the daily rates are used, then translation date becomes very critical, because whatever the date that you enter, on the date rates are picked up. Baseline date is a typical SAP date here. This is a flexible date, and from the baseline date your due dates are calculated for the invoices. So as a formula, due date equals to the baseline date plus payment time, payment term days. This date is normally taken as a document date or posting date. Again, it is a flexible enough, user can enter this date also. When it comes to the due date, typically this due date is applicable for invoices or customer invoices or vendor invoices, or maybe credit memos and debit memos. Let us look at a small demo and see how these dates will play overall role in an accounting document. I'm entering a vendor invoice here. Let me give here vendor number 300. You see that invoice date, this invoice date here when it comes to the invoice, you are entering as invoice date, but when it is posted as an accounting document, so the document date is of that invoice date. So let me give here the last month date. So system still takes it because invoice date can be any date, whereas the posting date determines the posting period itself. So if it is the 9th period, then system will give you the 9th period itself here, right? And let me give here $500, and also to demonstrate the translation date, I'm giving here as a Canadian dollars, so that I can show the translation date as well. And then let me give any contra entry for debit side of this invoice. So I'm just putting $500. So if I go to the payment details here, so here we have seen two dates, right? Invoice date and posting date. If I go to the payment details here, you see that baseline date and due on. So due date is not entered manually. Due date is calculated based on baseline date. In this case, baseline date is coming from, if you carefully observe, is from invoice date itself. Since I entered 1st August, then baseline date is 1st August it is taken, and baseline date plus the payment terms, in this case payment term 10 days, so 1/8/2006, and due date is on 31/8/2006. So if I, for example, if I take a drop down and change the payment term, let's say, let me put the payment term of, okay, maybe a different number of days, so let's say 30 days. Okay. So then the moment I change the payment term here, see that the 30 days are calculated from here, right? So from this, the payment term, whatever the payment term is there, so there are some rules in this payment term. Based on that rules, this particular date is calculated. Okay, and there are some grace days, and all that is calculated here. We will look at the payment terms later on, but just to take away is that you cannot enter due date annually. It is calculated based on the baseline date. So if you go to the local currency here, since you entered in Canadian dollars, so you see that translation date is taken 12/9, and the exchange rate is given as like whatever the rate, which is maybe USD to Canadian dollars, right? So that is the rate picked up based on this translation date. So if I just go ahead and post this document, and then we can go ahead and look at how the accounting document look like. Okay, so I just posted the document. Let me just display the document here. So this is the typical accounting document. You see that the document date has become, it's taken from the invoice date, right? The posting date is same. And then if I click on that header section here, this is just small hat, click on that, you see here the date, entry date, when it is entered, time stamping also is here, translation date is here, posting date, again you see the posting period is 9, is based on the posting date itself. And if I go to the line item section of the vendor, then you can see here what is the baseline date. See the baseline. So in the document you will not have the due date, because the due date is calculated if the days are changed, and then automatically the due date is calculated that way. So this way you can see here very clearly that how different dates are playing role in the accounting document. Hopefully you enjoyed this presentation on the dates. Please visit simplefinancesupport.com to understand more financial concepts in the areas of SAP Finance. Thank you.